Hello, everyone. Today we're going to be talking about navigating real estate for busy professionals. I have a lot of friends and a lot of other people that I know keep asking me, what's the best way to invest in this uncertain time? So that's where I wanted to put this presentation together, where we're going to talk about some of the data points as well as some of the things that are happening in the current market and how we should be making our decisions to maximize our investment and wealth. So, without any further delay, thank you everyone for joining us today. I'm Karan Shah. I'm a fund manager at Value Plus Capital. I've been here uh, doing this for a while now. I'll have my introduction coming up soon. But I'm going to basically walk you through how intelligent and data-backed real estate investments can help you build lasting wealth, not just savings, but genius financial freedom. How can you achieve financial freedom? And this isn't about trading stocks or chasing uh, different trends, right? Sometimes people invest in Bitcoin, sometimes they invest in something new, shiny object. It's about understanding where capital flows, how market behave, and how we can position ourselves to benefit from that movement that is happening. We will explore why professionals like yourself, analytical, disciplined, and very strategic, right, often outperform traditional investors when the right framework is put in place, right? I'm an engineer, and we like to have a structure in investing, not do it based on our emotions. So that's what we're going to be talking today. A little bit about ourselves. Priyanka Shah, she's my partner as well as my wife. She's been in real estate for 8 years. We both have been in real estate for 8 years. She has a job as a project manager in IT. She's been doing that for a long time. And at the same time, she's been doing real estate for over 8 years now. We have done a lot of redevelopment projects. We have done a lot of different multifamily projects as well over the last 8 years. Myself, I have been part of a private equity firm managing their finance and been doing real estate for about the same amount of time, 8 years. And over the years, we have learned different things, and I'm always looking to help other people uh, understand how real estate works and to maximize their investment opportunities. Just to get the compliance out of way, we're not going to be talking about any specific deal, but there are always risks. There is a performance that had happened in the past that could not happen in the future. There might be some deals which we might talk in future about. There might be some eligibility criterias. And this presentation is not to offer anything or solicit. It's just to educate my audience here or people watching this. So, at Wellness Capital, our philosophy is simple. We make real estate investing more accessible and intelligent and trustworthy, right? It's not random investing opportunities that we bring up. We vet it, and we have a team which combines a data analytics, market research person, and a hands-on property management, asset management team member that delivers sustainable returns to some of our investors. We know our investors are very busy professionals, already investing time building, innovating in the technology world. And our role is to make your capital as productive as possible. Everything we do is rooted in trust, more like a transparency, and we can even show some proven track record. Principles, these are some of the main principles that ensure every investor feels confident, informed, and connected to their financial growth. So that's what we are trying to achieve here. Some of the projects that we have done is we have done some redevelopment projects, single family houses in towns around New Jersey, Linden, Livingston, and things like that. And then we have a recent project going on in Livingston right now, and when we have a project which is about to go on market in Scotch Plain. So we do some redevelopment projects as well. We have got multifamily properties in Roselle Park and other places around 30 minutes from in New Jersey from Roselle Park. So we kind of do that. We have invest with other partners in Statensburg, South Carolina, for a 297 unit apartment building. We also do partner with other investors for property in Newark, New Jersey. So that's where we do some multifamily, we do some redevelopment and projects like that. We would like to even share one of our investors because he's been with us for almost 8 years since we started into real estate, and this is some of the great feedback or comments they give us. As a New Jersey local, I was excited to invest in a project close to home. The team's transparency, updates, and disciplined execution gave me complete peace of mind. Everything was delivered on time, and I am already looking forward to joining their next opportunity. So he's been investing us one after the other, and he's been very happy with investing with us. So that's just a testimonial that you can see here. So uh, the financial freedom equation, right? So this is something I want to start our presentation today with. Is everybody talks about financial freedom, but how do you achieve it, right? How do we get to it? So that's where one of the financial freedom equation begins where strategy, expertise, and resources meet, right? So you need to have a strategy, you need to have the expertise to execute it, and you need to have the right resources in place. So those, when combined, you can have some financial freedom. So every wealth journey kind of starts with three key ingredients, right? One is time, knowledge, and capital. And most people have one or two of them, but very few know how to align all three, right? So money, if you just have money, what can you do? You can invest in real estate funds. Some of you might be investing in some REITs, debt investments, syndications, or invest with valueless capital in some of their deals, right? But then if you say, uh, I also have time and I also have money, then you can do some quick fix and flips. You can educate yourself in real estate and get into more deals because you have the money and you have the time. Uh, but uh, if you have a capital, you can access professional managed real estate funds and partnership with others and turn that capital into tangible growth. If you have knowledge, the ability to analyze markets, to evaluate risk and structure better, smarter deals, and more efficient investments. Right? And if you have time, which we discussed, you can do a lot more of that research and more work on that. And the knowledge, as we discussed, right? So those are the three different parameters that, when combined, it creates an opportunity. So if you have money and time, you can do long-term buy and hold. If you have money and knowledge, then you can do some turnkey projects because you don't have time. So you're going to buy a finished product and then invest and knowledge. If you have the knowledge, you know the right markets, and then you can buy some properties where it's fully set up for you, so you can just passively invest. And if you have time and knowledge, then you can JV with somebody, right? Because you have the time and knowledge and you need money. And that's where we can do some partnerships and maximize your return. So so this is where the financial freedom hits, when you can have the money, time, and knowledge to achieve that financial freedom. So that's where I want to just transition into what's the new reality of the digital economy, right? Let's take a moment and look at the world around us, right? It's been crazy last few years. We have seen how quickly technology has evolved and how that same speed can impact even the most skilled professionals, right? There's automation, AI, and this global competition has completely transformed how industries operate. Roles that seemed indispensable, right? Like sometimes you used to think, okay, this job can never be taken away a few years ago, and are like getting totally redefined or something replaced overnight. I was just speaking to my Priyanka yesterday, and they're eliminating a business analyst position and replacing it with more like a AI prompt engineer, right? So who would have thought those days would come? But that's how fast the things are changing. And now this isn't a message of fear, right? That's not the goal here to create fear, but it's a message of foresight. So smart investors or smart people think ahead of time and they try to prepare themselves to get there. Because if there is one thing professionals in fast-moving industry understand better than anyone is change. The challenge isn't the pace of change, it's how we prepare for it financially. So that's why where we are here today, right? To talk about building parallel streams of wealth that doesn't depend on the next market cycle or the next algorithm or the next corporate shift, right? Because things are changing so fast that we can't predict that. So what we are trying to focus on is real estate backed investments that offer the foundation of predictable, data driven, and more like a tangible return because whatever happens, people will need a place to live. And that's why real estate is always going to exist. And that brings us to an important crossroad, right? What comes next for high earning professionals who want to secure their financial future without stepping away from their core career? Because some of you might want to invest in real estate, but don't have the time or the knowledge to do it. And then you are also busy with your career, trying to maximize and make sure you stay top of your game. So that's where what are the next options we have, right? So option number one is focusing on learning AI, upskilling, and put the time and energy to continuously be the best in what you do and leave the financial future in the hands of stock market, right? You basically focus on your career, make sure you do your best and invest your money in stock market is one of the option, right? But as you guys know, stock market has been so super volatile that it just faint of heart person can't that. But again, what is the option two? Is to switch career in real estate, right? If you think real estate is going to be there, why can't I just switch my career, right? Sounds appealing. It's not a shortcut, right? It's going to take its time to learn, understand. It demands years of learning, capital, and a little bit of risk taking because you have been doing it for a while. So you need to learn how to do it. Uh, but yeah, it could be done, right? There's definitely an option. That's how we started into real estate is getting into it. Uh, but there is an option three. What could that be, right? So what we think is the smart move for some of you guys is to stay in your career that you understand that you have been spent so many years in making sure you stay on the top. But let your money work through the passive real estate opportunities that are there, where experts handle the deals, do the management, and generate the predictable returns. So that way you stay on top of your game, make sure you grow in your career, and at the same time make sure your wealth also grows and it doesn't just fluctuate with the whims of stock market, right? So that is a third option, right? So that's what we think. There are three options, and you guys might want to choose which one best suits you. But each one of them has its pros and cons. So when you're why choose real estate over stocks, right? Somebody might say, hey, stocks, I like investing in them. Short term, yeah, they're very volatile, but long term, they do make decent returns. So yeah, that's probably true, right? So we're going to show you some data that can help you make a good decision, right? Because on one hand, there is a lot of economic uncertainty, but people still need homes, right? And that means the cash flow will continue. People are going to continue to rent. And on the other hand, the stock market can swing widely overnight based on headlines or some investor sentiments or global events, all factors outside your control, right? So real estate provides you both the stability and growth. You benefit from the rental income, appreciation, and some of the powerful tax incentives that are provided by the tax code. That's why I think we believe, especially for professionals who value long-term wealth, real estate is not just an investment. It's more like a strategy for financial independence, right? Because that's the goal. End of the day, we all want to make sure we are financially independent to do what we love doing instead of just doing the work to make money. Uh, Going over to this, why choose real estate over stocks? As you can see here, we have put a chart here. This has been the average trend for every time there was a recession. So there was a recession in 1981, there was a recession in 1990, 2001, and 2008. All of us knows about that, right? But out of all the recessions, if you see, when stock market went down 5% in 1981, the real estate was only up 2%, right? When uh, 1990, it was negative 3%. The real estate was 1.5 positive. So you can see that out of all the recessions, only 2008 was one of the recession which had impact on real estate. None of the other recessions have any impact on real estate because real estate is something that is a basic necessity of a human, and that's why it kind of stays strong. Again, this might vary depending on what areas. There is different types of markets that have different impacts. There is A market, B market, C market. C market might see some more impact, but overall, this is kind of a high level trend that shows you what is the impact of recession on real estate. And with everything that's going on, somebody might say, yeah, it seems like a recession is going to hit, right? So that's why we wanted to make sure that we make sure our capital is preserved and not lost due to any financial uncertainty that's there. Uh, so going on to the next, right? Real estate wins on what matters most. What matters most is income, current income reliability, downside protection, right? Correlation between different investments that you have, right? So stocks, income, it doesn't provide much income, right? Overall, S&P 500 gives 1.4% return in terms of income every year, whereas real estate generally gives 8 to 10 to 12 to 15% return sometimes, right? Depending on how the market is. So there's lot more income that it can generate. There is more reliability. Real estate is a little more steady than volatile stock market is, right? And there's a lot of downside protection, right? Bank is willing to lend you 80% on a real estate, but if you ask them to lend it on their own stock, they won't lend you on that, right? Because they know it's very volatile and it's not uh, safe. Another correlation is between stock has very high correlation with everything that's going on in the market, whereas real estate has some correlation, but it's not directly influenced by some headlines. Uh, and then with 2026, there is all this high valuation of the stocks. We don't know what's going to go up, what's going to go down. Nvidia is all the way up, then correction happens and things keep changing. Real estate has been pretty stable. There are some tailwinds, but it's still pretty in a good condition. So going over to some of the data-driven market insights, right? So we just want to talk about data. We just don't want to talk about emotions. So let's start with the big picture of the multifamily market cycle. We saw a historic supply peak in 2024, right, with around 585,000 units. And that's what was the peak of supply. And then deliveries declined in 2025 and are projected to drop further in 2026, right? So a lot of developers, when capital was really cheap, when you can buy 1%, 2% capital, you can do a lot more deals, right? But so all the construction was done. But since then, interest rates goes up. Now they're not able to make a project viable. So the deliveries has declined. Deliveries means finished housing product. For 2025, average rent growth was 1%, and vacancy was 6.6% in multifamily sector, right? So it's not best, right? 1% growth is not great. Generally, we would like to see 3% growth, right? But that's why 2026 rent growth is expected to improve slightly to 2.3, and vacancy kind of slowing down to 6.3%. So we are optimistic about 2026, right? So that's some of the data points that we have. Now, some of the rental market occupancy and vacancy trends, right? That's what we'll talk about. So vacancy has been rising over the past few years, right? Moving from 5.8% in 2023 to 5.6.2, 2024, and then peaking nearly 6.6% in 2025. This increase was largely driven by surge in new supply hitting the market, as we discussed, right? So in 2026, we expect vacancy to decline slightly to around 6.3%. While that may seem like a small shift, it's actually a key signal that the market is stabilizing, right? It's just moving in the right direction is what is more important. It's also important to distinguish this from the broader national rental vacancy rate, which includes all housing types, right? So that number has increased from about 6.6% in 2024 to around 7.2% in 2026. So the takeaway here is that supply pressure is easy, right? But we are not yet in a tight market. We are in a transition phase where balance is gradually returning. But yeah, there is a little more stability than what we had last year. What's happening with institutional capital, right? Asset allocation and trends in 2026. So we want to know what the BlackRocks of the world are doing so that they know something that we don't know. So that's going to be helpful. So institutional investors continue to maintain strong exposure to residential real estate with allocations at around 22% of their asset under management. This reflects a long-term confidence in housing demand fundamentals, right? And however, during 2024, 2025, we saw a slowdown in investment activity. And this was due to a lack of interest, but rather pricing uncertainty and higher interest rates, right? So it's all making impact to the housing. In 2026, the approach has shifted, right? Capital is coming back into the market, but in a much more selective way. Interest rates haven't gone down all the way, but they're still slowly coming down. Investors are focusing on distressed opportunities and markets where supply is declining and assets have potential for NOI growth as rent recovers. So instead of broad pullback, what we are seeing is a strategic repositioning. Capital is waiting for the right opportunities, not exiting the sector completely, right? So they are still investing in real estate, but they are being more strategic of how that should be done. Next, start in smart investing for busy professionals, right? So as a professional, you already understand how system creates efficiency and scale that real estate works the same way. Our approach is about building investment systems that generate consistent income growth and a more secure investing for your family. Through structure like syndication and managed funds, you gain access to institutional grade opportunities without having to operate them yourself, right? You can't buy a property in Texas sitting here. It's going to be a little hard for you. Versus if you can find a good operator who can do that, you might be able to generate better returns at a lower amount of work. So we handle the sourcing, we analyze deals, we have our management, and you benefit from the great returns that we are able to generate. There is transparency and control that allows you to maximize your return at a minimum risk. This isn't about being hands-off, right? It's like not it's about being strategic, right? You keep building technology, right? And we help your capital build along for the a long-term wealth. So that's what we are trying to provide to you guys to get a better financial future. Some of the multifamily advantages. So when we talk about real estate performance that truly compounds, multifamily really stands out, right? Unlike single family homes, multifamily properties distribute risk across dozens of or even hundreds of tenants. Some people say, okay, what if I just buy a condo and just rent it? Yeah, but what if they don't pay the rent. Now you have 100% vacancy. Who's going to pay the mortgage? It comes out of your pocket. But in a multifamily, there are like 100 units. If two tenants don't pay, there are still other 98 who's going to pay, and you can still maintain your mortgage payments. Right? A lot of times, even if 20% people don't pay, you're still able to make the mortgage. So that's kind of the safety that you get out of investing in larger multifamily instead of investing like a single family house. Uh, there is also they are also scalable, right? Each building brings multiple revenue streams, shared maintenance cost, and a strong leverage efficiency, right? You have one roof to manage, you have one property to manage, and you have so many tenants, which makes life a lot easier. And over time, this sector has shown remarkable resilience. Even during market slowdowns, demand for rental housing remains strong, right? And then value plus capital, our data consistently shows multifamily outperforms in both cash flow consistency because there are consistent rent flow and long-term capital growth because the real estate valuation goes high, which is why it forms the core of our strategy that we want to focus on, right? So, as I said, stability, scalability, diversification, and it has a proven performance, which you can't get in a single family. Going over to some of the multifamily 2026 snapshot data points, right? So, some of the key indicators in investing for multifamily is understanding the rent growth, understanding the vacancy rate. NOI stands for net operating income, and cap rate. Cap rate is what is determined for the valuation of the building. It's also used for valuation of a company, right? So that's how it works. But as you can see, that the rent growth is kind of coming back from 1% in 2025 to 2026. Vacancy rate is dropping slowly. NOIs are going up because we are able to do the rent growth, which helps us with better net operating income. And we are showing a reduction in the cap rate slowly, which is a good sign, which means the valuation of the properties are going higher. So all that is indicating is 2026, we are expecting it to be a good year for real estate. Data-driven investing framework. So we don't invest based on emotions. We do it with strategy. At Valueless Capital, every decision begins with data, not speculation. And our market analysis identifies regions with where fundamentals like job growth, migration, and rental demands are very strong. We don't chase headlines. We follow the metrics that we have laid out for our investment opportunities. Next comes financial modeling, where we project income, expense, and returns under different conditions. So we do different stress tests and different scenarios to ensure resilience. And through risk management, we evaluate the structure, leverage, and operator background, ensuring our capital is shielded against any kind of downside protection, right? Because you can have a great operator, but it's not a good deal. It's a problem. It's a great deal, but it's a bad operator. And the best deal could be spoiled by a bad operator. So we make sure that all that lines up to minimize any downside exposure. And finally, execution, tracking, and transparency is what we focus on. We monitor the progress, track performance metrics, and provide a clear, consistent reporting so that everybody's aware of what's going on. Our philosophy is very simple, right? We remove emotions, rely on strategy, and let the data drive the investment decisions. And that's how we are able to maximize wealth for our investors. Uh, Market analysis, financial modeling, risk management, and then execution, right? Those are the steps that we follow. Some of the US market outlook 2026 that we are seeing. Rent growth, we're expecting to improve. Vacancy rate reduction. There is every region has its different uh, supply and demand, right? So we'll focus on that. And all those things matter to make sure that we take the right decision. If there is a supply slowdown and plus consistent rental demand, it is going to basically improve the fundamentals. So, so high high ownership cost is also continuing, right? That's you can see that houses are becoming more and more expensive, makes it really hard uh, for homeowners. So a slowdown in new supply, continued renter demand, and sustained affordability challenges in homeownership. This combination creates a market that is built to stabilize first and then grow. And if you think about it from a systems perspective, multifamily real estate is not designed for short-term spikes. It's designed to absorb shocks and deliver consistency over long term. So in 2026, the real question is not where growth will happen, but where stability is already forming. Because the goal is not that to maximize return, but to make sure you don't lose your capital. And that is exactly why multifamily continues to remain a cornerstone in our investing strategy. So apart from multifamily, we also have debt investment opportunities that we provide to that has a fixed return model and it is a low risk investment, right? While equity investment in real estate are designed for growth, not every investor wants to ride the market cycle. That's where debt funds come in. In our single family debt fund model, your capital is directly secured by a real estate. You earn fixed returns, meaning you know your income and duration from day one. The approach suits investors who value capital protection, shorter horizon, right? Because generally the projects are on 1 year and a steady income flow. Unlike public markets where daily prices swings can erode confidence, our debt funds provide a measured contractual return, letting you grow your capital with clarity and control. At 12 Plus Capital, we have designed this as a bridge between safety and performance, where your money grows predictably backed by tangible assets, right? So that's a safe way of growing your capital. The opportunity ahead for building code to building wealth. So if we zoom out and look at the path we have traveled today, we begin with uncertainty around AI, automation, and job stability, right? That's a question on everybody's mind. And we then explore how real estate investment can offer the clarity, consistency, and control even when the world around us is shifting every day. Uh, from short-term sprints to long-term security is what we're trying to focus here, right? And you already built a successful career in technology, you understand systems, you understand scalability and timing. And those same principles apply perfectly in real estate, except now, instead of building for clients or companies, you are building for yourself. And this is not just about diversifying wealth, it's about creating a foundation that works for you even when you are not working for it, right? You're considered to be wealthy when your money is working harder for you than you are working for money. Because truth is, technology builds progress, but real estate builds permanence. And that's the essence of legacy. How to get started? Your part to smart investing is simplified. So it's a simple, transparent process, no complicated steps or high pressure falls, right? Step one, schedule a quick consultation. This is where we understand what you are aiming for, what are your income goals, what your timeline, and your comfort level. Second step is based on that, our team shortlist opportunities backed by strong market data and you get to review them at your own pace. We generally offer very limited opportunities in a year because we look at a lot of deals and then we say, okay, this one makes sense for our investors, maximizing safety and returns. Step three, uh, we start building confidence. The once you are ready, you invest and begin your journey. You have full visibility into your performance. You get updates and steady returns. Everything built on 100% transparency. This is how we turn curiosity into confidence and plans into portfolios. For those who are interested, we have some ebooks which we have designed for our investors. One of them is Smart Real Estate Investing for Busy Professionals, in line with some of the presentation that we had today. We also talk about tax because that's one of the biggest bills that you pay every year, and the season is on right now. So you might want to read that to maximize your tax benefits for this year or even plan for next year. And then we have another book about navigating the US real estate investment. We are discussing about what's changing, what are the different things that are happening that can impact your decision or investing in real estate or not. So these are some of the books that would be really helpful for uh, for you guys. Apart from that, you can book a call. We can have a review call, talk about what are your goals and aspirations, and see if you would like to be part of our team. You can join our newsletters. We have a regular bi-weekly newsletter that goes out that talks about what's going on in the real estate world. And apart from that, other financial decisions, taking the tools that can allow you to take better financial decisions. And we have investor portal where we discuss with our investors if any new deal comes up. So feel free to join them. Thank you very much for your time. It has been a pleasure speaking to you, and we are happy here to get in touch. Give us a call, check out our website, and let us know if we can help you anyway. Thank you for your time so far, and have a wonderful day. Bye.